What's up guys, Ryan here, back with another video, and in this video I'm going to be showing you guys what ICT has been hiding from you this whole time. Okay, and so we're going to be going over ICT's entries from this morning in his live stream, and we're going to take a deeper dive into the price action in a second. But before we do that, I just want to say that I am 99% sure that ICT use this tool that I'm about to give you guys. I'm 99% sure, right? He used to use this tool, right? But he's at a point now where he doesn't need to use it, right? Because he's seen the fractal so many times. He knows the characteristics and the behavior of price action, specifically in these market maker models, and he doesn't use it anymore, okay? I'm at that point right now where I don't need to use it either, okay? But for the sake of giving back to the community and providing content for you guys, I put it on my chart all the time, right? And so if you guys want to get a free trading plan showing you guys how to use what I'm about to show you, okay, there's going to be a link in the description, and you guys can pick up your free copy of my personal trading plan. All right, so with that being said, guys, let's hop on over to the charts. Okay, so I know there's a lot going on at this present time, but for everyone who's new to this channel, I know I've gained quite a few subscribers after my last video, right? Welcome. I'm excited to have you here, and I'm just excited to keep giving you guys free content, giving you guys everything I have, and doing the best I can to be a mentor, to be a asset, to be a servant to you guys alongside your trading journey, okay, to profitability. And so we're going to start off with ICT's entry here. Okay, so this arrow, okay, is where ICT went long, right? And so the thing that he's been hiding from you this whole time, okay, is going to be the William percent R, right? Who was ICT's mentor coming up in the 90s? Who did he learn from? Larry Williams. Okay, whose indicator is this down here? The William percent R. Do you guys know whose indicator this is? Who created it? Larry Williams. All right, there's no coincidence. Okay, ICT used to use this indicator, right? I wholeheartedly believe that he used to use this. And so if you guys have been following along, right, you guys know that we target internal liquidity here at Optimal Advance, right? So our entries are based off internal range liquidity, which is fair value, and then we target external range liquidity, which is equal highs or equal lows, right? So on ICT's entry here, price came down, okay, into this fair value gap, into this order block, right? At the same time, okay, the William percent R was making a lower low, right? The price chart is failing to do so. Okay, so what does this indicate to us? It indicates a change in state of delivery, right? So if we go back to ICT's content, right? A lot of you guys are going to be familiar with the SMT divergence, right? And typically when we have SMT divergence in the price chart, say with NASDAQ and S&P and Dow, right? So say S&P came down here and took out this low, but NASDAQ and the Dow Jones failed, right? This indicates to us a change in state of delivery. Okay, right? So what is this down here in the market maker model? This is the smart money reversal, right? And if we go back to month one content of ICT's mentorship, right? What are the 4 stages of delivery, guys? I want you guys to put them down in the comments below. Put them down in the comments below. Okay, consolidation, retracement, reversal, and expansion, right? So the SMT on the price chart, okay, we have a low taken out here by S&P, and we failed to do so in Dow or the NASDAQ. And so this indicates to us a reversal, okay, a change in state of delivery. Price comes up, we trade through this balanced price range, take out this high. Okay. Price is trading down into here. Okay, we're in the New York session, fair value gap, order block, balanced price range, very small one in here. Okay, we have SMT on the indicator, right? So like I mentioned before, this low is protected, right? At the same time that the William percent R is coming down into this low here, right? Taking out the low, we have price coming into fair value, right? This is where ICT went long. And here at Optimal Advance, this is the only setup that we take. Okay? We use the William percent R to help us identify timing and pricing elements to capture or to be a participant of the low resistance liquidity runs. Okay? And so you can see here throughout this whole model, right? We have multiple examples of this. Okay? So here, notice how we're bullish on the day. On the sell side of the curve, right, we have William percent R characteristics, optimal advanced setup. Price is coming back into this order block, right? Notice how it comes up into it once, twice, 3 times. Okay, study this as well. Optimal advance, right, with the William percent R, it tells you a lot of times which PD arrays are going to be reclaimed. Okay, I want to say that again. The William percent R helps us identify PD arrays that are going to be reclaimed, right? So we have this consolidation in here, right? This is technically a consolidation. I wouldn't deem this a retracement, right? We're trading from range to range here. We're stuck in the range for quite some time, right? 4 to 5 minutes or however long it is, right? So we go from consolidation, we get SMT divergence on the William percent R, optimal advance characteristics, price dumps, right? Why does it dump here? Because of the SMT on the indicator. It's indicating to us a change in state of delivery. So we go from consolidation to expansion, right? So when we break the high here and we take out this balanced price range, okay, our balanced price range is formed. The only market structure shifts we use here at Optimal Advance, okay, are coming in the form of, yes, a high gets taken, but also a balanced price range has to be formed. Okay, that's the only market structure we use here at Optimal Advance is when we have a balanced price range formed, right, created, okay, and a high taken. That's our market structure shift. Right, so when this high gets taken, we're going to be looking for long positions or long optimal advance entries. Okay, and that leads us into ICT's setup from today, his execution from today. So when price is coming into this fair value gap here, right, we have this low getting taken out, but we're failing to do so in the chart, right? So what is it indicating to us? That this retracement, right, which is one of the deliveries that we get in price, right, is going to end. The retracement is going to end in this area here or down in this gap here, right? It's indicating to us a change in state of delivery. So as price is coming down in here, I'm expecting this retracement to end. And I'm expecting low resistance liquidity runs to form, right? Just based off the liquidity that's layered in here, right? Time of day and things like that, right? So the William percent R really helps us identify when the change of delivery is going to be, right? What time and what price. Okay? The SMT on the William percent R, it indicates to us that there's going to be a change in state of delivery at a specific time, a specific price, and a specific PD array. Right? Price rallies. Okay, and this it happens all the time, guys. I want you guys to go back and back test. Okay? It's in every single asset class, every single time frame. You're going to see it. It's there. It's all over the place. Okay? The last setup of this market maker model is right here. Okay, with the order block, right? William percent R. So as price is coming into this order block, the William percent R is taking out the respective low. Okay, so price is coming into a discount. At the same time, the William percent R is tipping off smart money accumulation, right? Reaccumulation. So we have a consolidation in here, right? I deem this a consolidation. I don't see this really being a retracement. So when price comes down here, takes out this low, and we're coming down into here to mean threshold, into this order block, tiny little volume imbalance in there as well, right? This is another area that we can go long. This is another optimal advanced setup, right? We're changing the state of delivery. Every time we get SMT, the delivery is going to change. So just like here, right? Consolidation, we got SMT characteristics on the William percent R. Expansion, right? We were retracing into this fair value gap in the order block. We got William percent R characteristics. The delivery changed to expansion. We started to expand. Okay, again, we have the same thing. Price began to consolidate. Right, we got William percent R characteristics, and then what did price start to do? It changed its delivery to expansion. Right? And I just want to clarify some things, guys, before I close out this video. Is I've seen in the comments how Optimal Advance, the trading plan that I've given to you guys for free in the description, right, is not beginner friendly, okay? Because beginners struggle with psychology. Let me tell you guys something. I may not be, the best trader. I may not be the richest trader. I may have not made hundreds of thousands of dollars trading, but am I profitable? Yes, I am. Right? And so I struggled a lot with being impulsive and fear. Those were my two things, right, that I really struggled with as a trader, right, before I became profitable. And so what Optimal Advance does, and what the William percent R really helps us with, is actually psychology, right? So it helps us with fear of missing out because we are executing, right, before the change of state of delivery, right? If you look at all these setups, how much drawdown do we have? Not a lot, right? So fear of missing out goes out the window, right? Also because this gives us a lot of confluence with the William percent R on trade selection, okay? Which leads us into our next thing, number 2, is impulsiveness, right? I struggled a lot with being impulsive. I was so scared to enter in a trade, right? I didn't want to lose. I don't like losing, okay? I had to learn the hard way. I had to learn how to love losing, right? But so I was impulsive. I would miss my setup and then I would hop in, right? And then I get stopped at it. It would take me out and then go the other way, right? This framework here with the William percent R, it gets rid of impulsiveness, okay? Which is another psychological barrier that a lot of traders have, that a lot of people that I'm talking to right now have. The next thing is greed, okay? Greed. So at Optimal Advance here, all we do is we target a 2-to-1 risk to reward ratio. We target nothing less, nothing more, right? And why do we do this? We do this because confidence and conviction are going to be necessary ingredients to your success. You want to have confidence and conviction in your setup and in your data. But more importantly, you want to maintain that confidence and that conviction. You don't want to lose that. So here at Optimal Advance, we target that 2-to-1 risk to reward ratio, and we limit our time under tension, right? If you guys struggle with psychological issues, targeting a 2-to-1 right? It's going to minimize your time in the marketplace, especially with low resistance liquidity runs like this. If we're going to be targeting these, okay, you're not going to have enough time to succumb to your flesh or your emotions, right? The next thing is fear, right? I struggle with fear quite a bit, like I mentioned a couple minutes ago, right? I was so scared to enter trades, but once I had this piece, this missing piece, which is going to change your trading, okay? It's going to really help you guys, like it really helped me, okay? It gave me the confidence that I needed to get into the market and to not be afraid of losing. Because as you can tell, look how many setups there are in a matter of an hour. There's 3 setups here that are probably all more than 3 to 1. Granted, but we only target 2 to 1 here. Right? There's a plethora of setups. So I can get in, right? Any one of these knowing that if I lose, it's okay because I'm going to have another setup in the next 20, 30 minutes. Right? Or even in a different asset class or tomorrow, right? This is happening all the time. Okay, and the last thing, guys, that this really helps us with is our trade management. Okay, going back to the delivery, the 4 stages of delivery that ICT talks about in month 1 of his content on YouTube, the 2016 mentorship. Right, so we know here, okay, if we're going long in here, this is the setup that I would have taken. If price comes down here, right, and we get William %R characteristics, and I'm expecting price to move higher, okay, if we begin to not respect this fair value gap in here, in this order block, and we trade below here, okay, we don't get the delivery that we're expecting, we know that we're most likely going to be on the wrong side, right? And that's why I say, I'm going to type it out here again, the 3 things you guys need to study, okay? So first of all, you guys need to be watching this YouTube channel, right? And the things that you want to be focusing on ICT's channel, okay, is market maker models, okay, power of 3, and high resistance liquidity runs and low resistance liquidity runs. So these are the things that we're going to want to really focus on over at ICT's YouTube channel. You really want to dive into these concepts and build a foundation around this. Okay, this is all optimal advance is, right, with the William %R. All right, guys, and the last thing I want to say, I just remembered before I hop off here, is this optimal advanced trading plan, it's not set in stone, right? As you can see, there's multiple examples that we can use, right? You can use the breaker here. If your eye goes to the breaker, use the breaker. For me, I like the fair value gap in the order block. That's what I use, right? But there's a plethora of different PD arrays that you can plug in, take out within this model, okay? But in terms of this model being an internal to external model, right? The fair value gap is going to be essential. And then you can either choose the order block here or this breaker, right? So it's not set in stone, guys, right? Whatever you guys want to use, either the breaker, the order block, the fair value gap, the balanced price range, okay, whatever your eye is drawn to the most, use those, okay? You have 4 options. The breaker, the order block, right? The balanced price range and the fair value gap. Okay, those are the 4 primary PD arrays that we use here at Optimal Advance. And whatever one your eye likes to gravitate to the most, use that one. Okay? One or the other. So it's either order block, fair value gap, or balanced price range, breaker. and you can mix and match, right? But there at least has to be 2 PD arrays for us to execute a trade. All right, guys, with that being said, I hope you guys have gained something from this video. I think this is going to help you guys immensely with your psychology, not only that, right, but also with your profitability and just trading overall as a whole. I think this is really going to help you guys. Go back and back test this, study your butt off. If you guys have any questions, leave them in the comments. If you guys want to connect one-on-one, reach out to me on Instagram, right? I'm here to serve you guys. I am here to help you guys become profitable traders. I'm here to be a servant. I'm here to help you guys and do the best that I can to bring you guys to where you want to go, which is being profitable. Okay, I know there's a lot of break-even traders out there in the ICT community. I have a bunch of buddies who are break-even who aren't profitable yet. Right? And I know there's a lot of you out there who are break-even and not profitable yet. Right? And I want to be a part of your journey, and I want to help you guys get your desired result because I know I can help you. All right, guys, with that being said, God bless you. I hope you guys have a great rest of your week. And until next video, good luck and good trading.